All right, we're taking a live look at the markets. We're currently in the red, but not by much, less than 0.5%. We'll keep watching it, bring you updates as warranted. Joining us this morning is Wall Street Journal investing columnist Spencer Jakab. Spencer, thanks so much for joining us. So for people who need that reminder, today is tax day. The IRS says its data shows the average return is up more than 10% this year. Who will be the biggest beneficiaries of that?
Well, tax refunds tend to benefit people on the lower end of the income spectrum. Lots of people get tax refunds, but they're much more meaningful if you're lower middle income than if you're wealthy. Wealthy people got tax breaks too through the tax bill passed last year, but they tend mostly to save that. So the spending impact mostly comes from people who are middle class or lower. And in terms of what to do with it, I mean, the first best thing you can do if things are a bit tight financially, is instead of buying something you think is going to make you rich, pay off something that's making you poor. If you have auto loans, if you have credit card debt, the best bang for the buck and the most certain bang for the buck comes from doing that. Then if you're going to invest it, it's tax day. Think about taxes. Don't be hyperactive with the money that you invest, because it's much more tax efficient to kind of put some money in the market, set it, forget it. Don't trade, certainly don't trade within 1 year, because that incurs a much higher tax rate. And, and also don't pay a lot for it. Don't buy something exotic that has high expenses. Pay attention to how much it's costing you.
Where do you think people will spend, if they're not going to invest it in these ways that you've suggested, where do you think they're going to spend their returns in the economy? Like, especially when you're looking at gas prices where they are.
That's right. I mean, that's a bit of a fly in the ointment. The expectation was that you'd have a big boost to consumption in the first kind of third of this year, because a quirk of the tax law was that people's withholding, even though the law is retroactive, it wasn't changed in many cases. So starting in January, people started seeing a bit more in their paychecks. And then starting in late January, these refunds started coming in, which, as you said, are about 11 or 12% higher than they were a year ago, also because of changes in the tax law. So that is sort of a double boost. People tend to spend it in merchandise stores. So, for every dollar that people get back, about 20 cents winds up being spent in, at Walmart or furniture store or something like that.
It's not
all spent, saved, but that's where you do tend to see it, and that's about the ratio. But maybe not this year because of gas prices, because that also tends to hit lower income households more than wealthier households.
All right, Spencer Jakab, thank you very much for your perspective. We appreciate it.